So with it being the start of the year, I thought it'd be good to round up my picks of the best savings accounts right now. And primarily it's the ones that are going to pay you the most interest. But I've also looked a little bit about convenience as well. I'm not having to have too many different accounts piled up. Now, these will change, okay? They might change tomorrow, next week, next month, 6 months time, whatever it might be. But I'm pretty certain the accounts I'm talking about right now might not be the best ones for you at other points throughout the year. But don't worry, because every single month here on the channel, I do an update, sometimes twice a month, of the best ones that come out, the new accounts, changes to old accounts, whatever it might be. So if you haven't already, make sure you do hit subscribe, hit follow, so you get those updates, you watch those updates every single month, so you know whether it's worth moving your money later on. And I also do every single day over on the website, on the blog, a best buys table update as well. Sometimes twice a day I'm looking at that. That's becleverwithyourcash.com/savings. So head over there, bookmark that, check that one out as well, because that's where you'll find out straight away when new rates are released. But right now, the accounts I'm taking you through in this video, they are going to be the best ones for you. I'm going to look at a couple of categories as well, though. I'm going to focus it down a little bit. I'm looking at the best place for your easy access savings, the money that you need to get to for an emergency or because you're saving for something quite large this year. I'm going to look at the best accounts for ongoing savings. So your salary comes in and you're taking some of that money and you're putting it into a high paying account. I'm also going to look at the best accounts for those of you who might have gone over your personal savings allowance. And with rates increasing, and if you do have larger sums of money, that is likely to be happening, particularly if you're a higher rate or additional tax rate payer. And finally, I'm also going to touch on some of the best ethical savings accounts out there. Yes, I know I could have looked at other things, kids savings accounts, could have looked at Sharia accounts, could have looked at fixed accounts. Don't worry, I will do those in other videos, particularly in my monthly updates. But I'm just really focusing here on the best places for your cash that you've got right now. And let's start off with your best easy access savings accounts. It's important to say here that unless you are saving for something pretty big on the horizon, anything from a holiday to a car, to a deposit, to a wedding, any of those kind of things where you need maybe a chunky amount of cash, you don't actually need a lot of money. Really, your easy access funds, your money beyond the things you're saving for right now, should be about emergencies. The general rule of thumb here is to have enough cash available to you at any moment to cover you lose your job or you're ill, anything basically where you can't work for 3 to 6 months. So you can cover your mortgage or your rent. You can cover your bills, those essential bills. You can cover petrol if you're going for job interviews or even just to get to work, whatever it might be. Having that money aside. Now, 3 to 6 months, that might be beyond your means right now. That might not be something you can get. But ideally aim for that. Even if you only get a month of savings in there, if the dishwasher breaks, if the dishwasher, that's not really an essential necessarily, is it? The washing machine breaks, if the car fails its MOT, the roof leaking, whatever it is, you've also got the money there for that kind of stuff as well. So really what I'm going to talk about here, I'm talking about accounts. I'm going to say, let's assume you've got £2,000 would cover your essentials every single month, okay? And let's say you want to have a 6-month fund. So let's talk about it in those kind of terms right here. So we're looking at maybe where to put 12k of savings if you can get up to that amount. You might not be able to do that. You might want more than that. You might find your essentials are larger than that, cost more than that, or you might want to go for a year. You might want to really protect yourself, particularly if you're in a kind of job that's maybe a bit more erratic in payments, you're freelance, whatever it might be. You might want to have a larger sum available to you in easy access. Now, obviously, you could break this up. We could go really complicated here. We could put it into notice accounts or smaller term fixes and things like that. I'm just assuming you need to be able to get all of that money in one go for this example. And the top one, the best one here for you, is the Barclays Blue Rewards Rainy Day Saver. This one will pay you 5.12% on balances of up to £5,000. Now, after £5,000, it drops down to 0.5%. So it's not going to be the best place for your money there. But if you have up to 5k in savings, you cannot beat this for a lump sum, whether it's easy access or fixed, whatever it is. That is the best rate out there right now. Now, it's not as simple as just going to Barclays and opening up this account. You do have to have a Barclays current account. Relatively easy to open up online or in branch. Open up that account, but then you need to add on something called Blue Rewards. Blue Rewards is a little bit more fiddly, but it shouldn't be enough to put you off getting this interest paying account. You have to, once you've activated it, have £800 going into the savings account every single month. Doesn't have to stay there. You can withdraw it straight away into a different account if you want to, or spend it. Does not have, just has to enter it in a calendar month. And you also have to have 2 direct debits if you have 2 direct debits coming out of the account and the £800 coming into the account, then you will get a £5 reward every single month. Now, this is important because Blue Rewards comes with a £5 fee. So effectively, by doing those actions, you are cancelling out the charge. It makes it free for you to have. You will have to manually move every single month that £5 reward out of its Blue Rewards wallet into the current account, which is a bit of a faff. But as long as you do that, the account is free and you can open up this rainy day saver. And if you put the full £5 in there and you have it in there for 12 months, you will get £256 of interest after a year. You cannot beat this one at all. Top paying account for easy access. Of course, it does have that limitation, doesn't it? The only maximum of £5,000 you can earn that rate on. And if we are talking about that example I gave just now, you want to have 12k in emergency savings, or maybe you have got something big you're saving for that goes beyond that. What do you do? Well, this is where my 2 runner-up accounts come into play. Now, there are a number of accounts I could have mentioned here that do pay a decent amount. The Nationwide FlexDirect pays 5% for 1 year on up to £1.5 I will come back to that one. And there's the Santander Edge account, which pays 4% on up to £4,000, drops down to 3.5% over a year. However, there are restrictions with both of those, so they might be suitable for you. They are not my top picks after the Barclays account. Instead, I'm actually going to pick the Coventry Building Society Limited Access account as the next best option for additional funds. Now, as I said, rates do change quite regularly on these different accounts, so you may well find that in a few weeks is a better option. I'll list that on the blog and in my monthly updates. But right now, 3.25% from Coventry. It is limited access. It's not full easy access. You can only take your money out of this account 6 times in a year. But I don't think that's going to be a problem because you've got hopefully that Barclays account with the money in there. That's easy access. Take your money in and out as much as you want. Take it out, put it in, it's fine. And then with the Coventry one, if you are needing to go into it for any big expenses, hopefully that's planned for. Or if it's an emergency, you'll need a lump sum. If you do get to a stage where you've taken it out 5 times, you've only got 1 withdrawal left, well, the next withdrawal, if it's early in the year and you think you might need more withdrawals from that lump sum later in the year, take it all out and then put it into a different account. But broadly, I think you're going to be fine with that. Obviously, you can save here more than the 5, 6, 7 grand you might want to complete that rainy day savings account, that kind of emergency fund. You can put up to 250k in this if you want to, but I wouldn't. The most you want to put into it is 85k. That's true for any savings account because that's the maximum limit for the financial services compensation scheme. So this one, okay, nice for extra cash, nice for any big things you've got coming up, maybe decent enough as well for any kind of inheritance that comes in that's going to be there for a short amount of time in an account, then you're going to move it across, or money from a sale for your house or whatever in a short term in there where you do want that kind of additional protection that goes beyond 85k, but definitely not for any longer term. However, that 6 withdrawal thing, if that is going to be an issue for you, I would look at my other runner-up, and this is from Chip. This one pays 3%, so it is lower. That's why it is not next one down to choose. This one also has a few things you need to be aware of. I did talk about this in a recent video update, so I won't cover it completely here. But fundamentally, what you need to know about the Chip account, the instant access account, is that the interest isn't an interest, it's actually called a bonus, and that bonus doesn't compound, which basically means you don't earn interest on the bonus itself. Now, that won't make a difference in the first year. That rate's that 3%, that's AER, annual equivalent rate. So that 3% there, you will get that in year 1. But what it means is in year 2, you're only going to get that again on that initial balance. You won't get it on the interest you've earned. Whereas other accounts, the Coventry one, for example, or maybe the next one down, you've got Zopa, you've got Chase, all offering lower rates, but interest compounds. You'd get interest on the interest as well. It's not going to make a difference in the first year or 2, maybe even 3 years, but it's certainly something to consider with this account. So check that out, right? My analysis of that if you are considering that. So that's your easy access account and any long-term savings you've got going on. But I wouldn't have too much more than that. Anything above that, ideally, think about investing it, overpaying your mortgage or putting it into your pension, okay? There's much going to probably get a better return in those places. Now, if you want to save new money every single month, then we come on to monthly and regular savers. And these are where we're going to get even higher interest rates. The best one here is from FlexDirect. They pay 7% interest every single month for a year. But the most you can put in every single month is £300. Now, if you do that every single month, the full amount, you can do less, but the full amount for a year, you'll get £135 interest. So that's a fantastic one to go for. You do need a current account with FlexDirect, but they have at the time of recording this and often throughout the year, if not continuously, comes and goes, a switching offer worth £175 cash. So if you're not with them already and you're eligible for it, switch in, get that switching bonus, open up that regular saver, put £300 in over a year, and at the end you've got £310, £310 of bonus, free cash you've got just from having joined FlexDirect. That is definitely my number one pick. The one below this will earn you the same amount of interest, interestingly. This is the Club Lloyds regular saver. The rate is lower at 5.25%, but you can put £400 a month in. And that extra money, despite the lower rate, means after 12 months, it's also £135 in interest. What I like about the Club Lloyds regular saver, you obviously have to have a Club Lloyds current account to get this one as well, but you get 6 free cinema tickets or a free magazine subscription with it, which is great. And there will be, I'm pretty sure of this, another switching offer coming later on, which is normally open to existing customers. You don't have to open it for the first time. That rule could change, but I wouldn't let it stop me opening up a Club Lloyds account right now, because hopefully I can switch another account into it later on to get some switching cash. Again, increasing that money I get from the account. Now, if you do not want to have a current account in order to open up a regular saver, then this last runner up here is from Halifax, offering 4.5%. The most you can pay in is £250 a month, which means interest maximum a year of 73 quid. So a fair bit less than with those other ones, but you don't need a current account. You just go to the Halifax website or into branch and open up this regular saver. And of course, if you want to, you can combine those or other accounts. Now, there are other regular savers that I've not mentioned, some of them with higher rates, some with different terms and conditions. They are all listed over, as I mentioned, over at becleveryourcash.com/savings. So if you want to, you can get a number of these. You potentially could drip feed from your easy access accounts into these regular saving accounts. And I have a whole video taking you through that, the pros and the cons of doing so. But that can even further increase the return that you get from your savings, combining easy access and regular savers. Now, I've taken you through, as I've spoken through this, some of the amounts of interest you might get if you've got the full amount in those accounts. And what was it? It's like 250 odd quid from Barclays. Maybe if you've got the Coventry one, another sort of 5 or chip, maybe another couple of hundred quid there. And then if you've got a couple of regular savers, another couple of hundred quid there. You can see we're slowly getting up to £800 interest, maybe more. And if you have more money in those easy access accounts or more regular savers or maybe a fix or whatever elsewhere, there's a very good chance that you're going to earn more than £1,000 interest in a year. And this is important because of something called the personal savings allowance. Now, I've got a whole video taking you through in detail exactly what this is, what it means. But fundamentally, this is about tax on interest. If you are a basic rate taxpayer, so you pay 20% tax on your earnings, you earn less than £50,270 a year, you get a £1,000 personal savings allowance. That means you can earn £1,000 in interest each year without paying any tax. If you're a higher rate taxpayer, that allowance drops down to £500. Okay, so that, if you're a decent amount of cash using the accounts I just mentioned, you could easily go above that 500 quid, which means you start paying tax on the interest above that 500. And if you're an additional rate taxpayer, you don't get a personal savings allowance at all. So you pay tax, 45% tax on all interest you earn. So what do you do then if you are, whichever level personal savings allowance you have, what happens if you go above that? Well, you've got a choice. You can pay the tax on the interest you earn above that allowance, okay? Not all of it, just above that allowance. You still have that allowance. And sometimes that is going to be your best bet. However, I'm going to take you through what I think are actually the winners right now at the time of recording this, the start of 2023. And the first one is the Barclays 1-year flexible cash ISA. Now, this is a fixed rate ISA. It's fixed for a year, but unlike other fixed accounts, you can get some of your money out. So I'm assuming that you have got other easy access accounts elsewhere before you go to this. This is money you can, pretty unlikely you're going to need to get hands on all of it in a year. But if you need to get some of it, you can, which is why not only is the rate good, not only is the interest earned tax-free because it's in an ISA, but you can also access some of your cash. Now, you can withdraw money 3 times a year, and you can do a maximum of 10% of your deposit each time. So let's say you have 5 grand in this account. The first time, the most you can take out is 500 quid. That reduces your balance to 4,500 quid, which means the next time you can take out a most 450 quid. And if you did need to make a third withdrawal again, you can take out a maximum of £405. So you're looking at around 30% of your money you can take out in a year at most. And that's gives you some great flexibility. Plus, like I say, it gives you that tax-free interest because it held in an ISA. Now, the most you can put into an ISA every single financial year is £20,000. If you're transferring, and this account does allow transfers from other ISAs, if you built up a number of these over the years, you can transfer up to £1 million in ISA, which means all the interest you earn would be tax-free at that rate. Again, only for a year. After a year, you'll probably want to move it elsewhere, but that 4% is very, very hard to beat. In fact, if you are an additional rate taxpayer, this is better than that Barclays Blue Rewards rainy day saver that I mentioned in terms of how much interest you'll get because you're not knocking that 45% off your return. One thing to bear in mind here, of course, is if you are using this for cash savings, then that eats into your overall allowance, which you might want to put money into other types of ISA. The lifetime ISA, maximum of £4,000 you could put in there each year, or stocks and shares investment ISAs. So bear in mind that £20,000 limit. It is across all of those different types of ISAs. Now, my runner-up here is premium bonds. Now, premium bonds have been good in the past. They've been bad in the past. At the moment, they're okay. They're not great. There's a 3% prize rate, which doesn't mean you'll get a 3% return, because if it did, it'd be comparable with CHIP and not too far off that Coventry account earlier on. You'll probably get less than that. But the closer you are to £50,000, which is the most you can put in this, then the closer you'll get to 3%. And if you are likely to be paying tax on your interest in one of those other accounts outside of premium bonds or ISAs, then this is going to probably be a winner because your winnings, the prizes you get from premium bonds are also tax-free. So a really good one to consider there for larger amounts of money you've got when you already used up your personal savings allowance. Just bear in mind, you will need lots of money in there nearer that limit to get close to that 3%. The last one I'm talking about here, though, is ethical savings accounts, simply because a lot of the ones I've mentioned just now, as high paying the rates that are, they aren't going to be ethical. They're not going to be doing things with the money that you're giving to them to hold in savings that you would probably want to do with your money. Obviously, it's up to you. You want to go for the highest rate, then that's great. But if you are worried about your funds being used to invest in arms manufacturing or in fossil fuel extraction or any other things you might have personal issues with, then you want to be looking for an account which sadly is likely to pay less, but at least you know your money isn't going towards some of those activities. Now, my best buy here is the Nationwide FlexDirect current account. I said I'd come back to that one. This will give you 5% interest on balances of up to £1,500 and only for 12 months. And also you can only get this once. And that's why I didn't mention it earlier on, because I think for everyone else, let's hold off on this. If you're not too worried about ethics, don't go for this account right now because you might need it at a later date when maybe the rate's improved or the balance that the interest is paid on has improved. But if you just want to get the best paying account you can right now and you want it to be ethical, building societies are always winners because the majority of their cash goes towards lending people money for their mortgages. And this Nationwide one, 5%, you cannot beat it. It is a current account, so you will have to apply for that one. Just bear that one in mind. Every now and again, Nationwide does a switching offer. They haven't had one for a couple of months now. It could return. If it does, I'll let you know in my bank account updates as well. So make sure you check out those videos every single month. The runner-ups are ethical money. If you've got a larger amount of cash, it's that Coventry Building Society limited access account that I mentioned before. Just bear in mind those 6 withdrawals. It may well be that you want to have another account ready to go to if you do get to withdraw 6. If you're going to go into this money quite on a regular basis, maybe a different Building Society account with a lower rate is better for you. And Coventry Building Society also has a decent regular saver. This one pays 4%, so not as good as the others I mentioned, but still pretty handy. And you can put up to £500 into that account every single month. Again, any building society you go to is a good option for you. There are many, many more options, but again, this is just a quick roundup of my picks right now. So there you go, my top savings accounts for 2023. As I said at the beginning of the video, these will change. So don't forget to check out this playlist here, which will take you through all the updates that go out throughout the rest of this year and beyond. And head over to becleveryourcash.com/savings for the latest rates. Every time there's a new account announced, I'll put it in there, plus some more options beyond the ones I've mentioned today. My name is Andy Webb. I'd love to know what you're going to do with your savings. Let me know in the comments below. And in the meantime, check out these videos right here.